Hello, and welcome back to another lecture video dealing with Chapter 3, which talks about accrual accounting. So we already went through the a lot of the accounting cycle, right? Looking at chapters 1, 2, and as well as this chapter, Chapter 3. In this video, we're going to talk about the closing process. So you should be able to determine which accounts get closed. You should also be able to explain we close how we close each of the accounts, as well as you should be able to summarize the accounting cycle. Okay, so in the closing process, we need to categorize our accounts, right? Our accounts are either permanent or they're temporary. Permanent accounts are the accounts whose balances carry over from one accounting period to the next accounting period. Basically, these are all the accounts that are on the balance sheet. So assets, cash, accounts receivable, any prepaid equipment or prepaid asset accounts that we have, any property, plant, and equipment accounts that we have, like land, building, equipment, accumulated depreciation. That is also a permanent account that never gets closed, right? Because their balances carry over from one period to the next. Same thing with all the liabilities, all the payables, right? The owner's equity accounts, things like common stock, retained earnings. Those are also permanent accounts which never get closed. So basically, the easiest way to remember it that I find is that any account that shows up on the balance sheet, that's a permanent account. We don't close it. Temporary accounts, on the other hand, are accounts that we use to collect information for a specific accounting period, and then we reset it. Okay, we reset it to zero. We do that by transferring those account balances to a permanent account. So your temporary accounts are things that show up on your income statement, things like revenues, expenses, dividends, income summary. That's another account that we have that's a temporary account. So we're just going to use it to collect information for a specific period. Then we're going to reset it to zero. Okay. Remember, the closing process says we got to get our temporary accounts to be zeroed out, right? We got to get them closed so they're ready to start fresh for the next period, to start collecting data for that new period, meaning they're ready to start collecting revenue that applies just to a specific period, expenses that apply just to a specific period, dividends which apply just to a specific period. Okay. We're not going to use the income summary account. We really don't need it. It's not mandatory. What we're going to do is we're going to transfer the balances of our temporary accounts to retained earnings. And remember, retained earnings is an example of a permanent account. Dividends, which is a temporary account, is also going to be closed to the retained earnings account. Okay, so we're going to go through some of the entries that we do in the closing process. Like I said in video 1, debits and credits, we got to know those, right? So let's think about it, right? The first account we're going to close is revenue, right? We're always going to close revenue, right? Because we want revenue to only collect data for one specific period. Once that period's over, we want to start fresh for a new period to determine what revenue we make in that period. Okay? So, revenue. How do we increase revenue? We increase revenue with a credit. We decrease revenue with a debit. Credit is the normal balance side of a revenue. So, we're closing revenues, right? We need to decrease our revenues. Now, remember, revenues actually increase our retained earnings, okay? I know in the prior video we said, oh, net income, right? Well, yeah, net income does increase retained earnings. So does sales revenue or any kind of revenue, okay? So how do we increase retained earnings? With a credit. How do we decrease retained earnings? With a debit. What's the normal balance side? Credit. So to close revenues, we always have to debit a revenue, credit retained earnings, okay? Now, we need to close all our expenses, all the cost of goods, all the wage expenses, all the rent expenses, all depreciation expense, all interest expenses, okay? So let's think about this. How do we increase a debit? Well, we increase a debit, sorry, just gave you the answer. How do we increase an expense? Well, we increase an expense with a debit. We decrease an expense with a credit, okay? Debit's the normal balance side for expenses. Now, we want to close the expense accounts. So they already have a balance in them on the debit side. In order to close an expense, we need a credit entry. So we're going to credit all of our expenses. What are we going to debit? Well, all our expenses get closed to retained earnings, so we have to debit retained earnings. Well, let's think about why that makes sense, right? Well, how do I increase retained earnings? With a credit. How do I decrease retained earnings? With a debit. So expenses actually decrease retained earnings, okay? What's net income? Net income is the difference between sales revenue and all our expenses. So what we're doing is we're kind of picking it apart, saying that, well, yeah, net income increases revenue, or I'm sorry, net income increases retained earnings. Net loss decreases retained earnings. Well, what makes up net income? Revenues and expenses. So revenues have to have the same effect on retained earnings that net income does, okay? Expenses decrease retained earnings. So guess what? Expenses have to have the same effect that a net loss would on retained earnings, okay? And then finally, oh, nope. Yeah, okay. So then what we do is we go ahead and we prepare a post-closing trial balance. Now, if you'll notice in this last slide, we did not close our dividends yet, did we? Well, in this example, we didn't pay any dividends, so we're not going to do the adjusting entry because we did not pay dividends. If we did, guess what we would do? Dividends, it's an expense. How do we increase an expense? With a debit. How do we decrease an expense? With a credit. So we would credit dividend expense. We would debit retained earnings, okay? And that makes sense because what is a dividend? A dividend is us, or the company rather, giving back to the owners. We're taking our earnings and we're distributing them through a dividend to our owners. Dividends decrease retained earnings. So that makes sense that we would debit retained earnings to decrease it, and we would also credit dividends expense to decrease that as well, to get that dividend account ready to start tracking dividends for the next period, okay? Once we prepare our closing entries, we have to do an adjusting trial balance or a post-closing trial balance. We do this to make sure that all our temporary accounts have in fact been closed to retained earnings, and we make sure that our debits and credits equal after the closing process. So take a minute, take a couple seconds, just read this and then answer the question. Okay, so it says the following is a true statement regarding the closing process. Dividends are closed to retained earnings by crediting retained earnings. Well, no, they're not, right? Yeah, dividends are closed to retained earnings, but not by a credit. Because if we, or I'm sorry, Getting ahead of myself. Yes, that is correct. So A does count. We need to credit retained earning, or no. Credit retained earnings. Hold on. Apologize. Pump the brakes. See, stuff's so exciting. I get so excited sometimes. Okay. So dividends are closed to retained earnings by crediting retained earnings. We're going to credit retained earnings. Again, no, that's not correct. Well, think about it. How do we increase retained earnings? With a credit. How do we decrease retained earnings? With a debit, right? So retained earnings actually needs to decrease to close dividends because dividends take away from our retained earnings. A says we're increasing retained earnings, so A is not correct, okay? Revenues are closed to retained earnings by crediting retained earnings. Well, let's think about that. What am I doing to my retained earnings? Retained earnings increase with a credit, decrease with a debit. Yep, that makes sense, okay? Expenses are closed to retained earnings by crediting retained earnings. No, that's not correct, right? Because retained earnings or expenses decrease retained earnings. How do we increase retained earnings? With a credit. How do we decrease retained earnings? With a debit. So by crediting retained earnings, we're actually increasing it, and that's not the effect that expenses have on retained earnings, okay? Excuse me, I'm sorry. And D is just the opposite of B. We know B is correct. Debits decrease retained earnings, and revenues we know increase retained earnings. So no, we're not going to do that, okay? So we need to talk about quality of the accounting numbers, right? And you kind of might be saying, well, what are you talking about? You know, we get receipts, we have invoices, we know how much we pay for stuff, we know the revenue has to be accurate because we charge a specific price, right? So we're using factual numbers. Well, not all the time. You might say, well, what are you talking about? Well, remember, a lot of the adjusting entries we did was factual information, right? Rent costs X amount per month. We prepaid it. So, X amount times 12 gives us our total rent, and we're going to systematically decrease that. So those are, actual numbers. However, when we get into depreciation, right? Sum accrual accounting, aka depreciation, involves estimates and judgments, right? How long do we think this machine is going to last us? Well, maybe it's 10 years, maybe it's 5 years, right? We have to make an estimate. We have to estimate what the value of this asset is going to be at the end of its useful life. We're going to get 5 years out of this asset. In our example earlier, we said that, we estimate it's not going to have any value, right? It's going to be worthless. Is that true? Well, we don't know what the market's going to yield 5 years from now. So there might be a company out there that wants to buy our used asset, okay? So the point is that when we do sum accruals, depreciation specifically, that we've talked about thus far, it involves estimates and judgments, okay? So it's important as managers, as who's creating this depreciation schedule, are we conservative or are we aggressive with our estimates, okay? So in accounting, we always want to be conservative with our estimates, okay? The more conservative we are with our estimates, the higher the company's quality of earnings is to be judged, okay? So we have people judging us, right? We have analysts that judge our stock. Well, are these analysts, are they conservative or aggressive in their estimates? Well, I hope they're conservative, because if they're conservative and we're conservative with our accounting estimates, guess what? Our quality earnings are going to be better, okay? We are not going to go through this. I will not, on the exam or whatnot, I will not ask any question involving the income summary. It's the same thing The only difference for your knowledge is that instead of closing revenues and expenses to retained earnings, we close them to the income summary. So the income summary actually gives us our net income or our net loss, right? And we could see on this example that the income summary has a balance of 7850. That number should sound familiar because that was the net income that we had on our income statement. Okay, so the income summary is just kind of a temporary account we can use to gauge net income. Okay, calculate our net income. Income summary always going to be closed to retained earnings. Okay, again, we kind of went through the worksheet, not a big deal. Don't expect, not required to use that worksheet. Why? Because it's optional. Okay, you got to know how to put the financial statements together from the adjusted trial balance. But other than that, you're pretty good. You should be good. Okay. So we pretty much covered the accounting cycle here, right? We finished up with the closing entries. Okay. So when we come back in, what can you expect in our next videos? We're going to do some demos. I'm going to walk through some exercises on how to conduct or how to journal your closing entries, how to journal the closing entries, get you some practice on those, and I'll also demo a comparable problem to the homework. So tune back in for that one.